This is Expert Advantage, a behind the scenes look at how JD Power experts help clients turn actionable market intelligence into a strategic advantage. I'm your host, Michael Vermillion with JD Power. Today I'm joined by Mike Foy, Managing Director of the Wealth Intelligence Practice at JD Power. Mike, welcome to the podcast. Welcome to Expert Advantage.
Yeah, thanks for having me, Michael.
So what's the topic that's dominating your conversations these days with the wealth management industry?
Well, there's a lot of challenges, but one major issue really that executives and leaders are dealing with is how to deal with the demographic cliff that is approaching with respect to financial advisor talent. So, a few numbers to share with you. 26% of today's active financial advisors are above the age of 65, compared to just 11% that are under 40. And we also know that 56% of advisors say they intend to retire and leave the profession over the next 10 years. So we really see an impending huge outflow of advisors in the industry at a time where we actually see signs of demand for financial advice increasing. And without a large established institutional pipeline of talent, the way you would see in other professions like law or medicine, firms are really going to be challenged to be able to fill the gaps that are created by advisors that are leaving the industry, and be able to continue to serve the clients that are looking for professional advice.
So what's kind of creating this dynamic? Is it just kind of the baby boomers entering into retirement age? Is there a lack of people in their 20s, 30s, and 40s entering the industry? Does the industry not have a good, solid kind of comprehensive approach to filling their pipeline? What's going on here?
Yeah, I think there's a few things. So one is that historically there really isn't that pipeline again that exists in some other industries of sort of preparing people through the educational system for a career in financial advice. That is starting to change, but not rapidly enough to meet the decline. I think there are challenges for the industry in terms of attracting talent, particularly in some underrepresented groups. We've seen the industry continue to struggle to attract women in large numbers. So only between 15 and 20% of financial advisors today are women. This is an issue that's been understood for years, but the industry has really been challenged to move the needle significantly around that. And I think it's also historically been an industry where it's been very challenging for people that are coming into the industry to get established. Historical failure rates among advisor trainees are north of 70%, right?
Hmm.
So historically, bringing somebody into this business and enabling them to build up a client base to the point where they can be a profitable source of revenue for the firm has been challenging. And I think firms have different ways that they're trying to wrestle with this. Critically, firms need to get better at not only attracting talent that has the right skills to succeed in the 21st century wealth management business, but to do a better job creating things like mentorship programs and relationships, to do better in terms of advisor team formation, and of course, in terms of deploying new technology like AI in particular, in ways that allow advisors to be more efficient and more productive, as they will undoubtedly need to be able to support more clients in order to accommodate the increasing demand and the decreasing supply of professional advice.
So how does JD Power wealth intelligence come into play here? How are we helping the industry and the firms, number one, understand the problem, but perhaps number two, maybe inform the direction or the steps they need to take?
Yeah, so there's a lot of ways. I mean, I think a lot of our clients, of course, are measuring CX, client experience internally. Often they don't have really robust competitive intelligence, and but the situation is I would say worse when we talk about AX or advisor experience.
Hmm.
Often firms are not really measuring it very well. Um, and sometimes when they are, they're using a proxy that's not as effective as it could be. So looking at advisors through the lens of a standard employee satisfaction survey, um, which is not tailored to the very unique needs of a financial advisor. So I think being able to provide our clients with really rich visibility into advisor satisfaction and loyalty and the drivers of satisfaction and loyalty, and also being able to look at how they're performing in those areas relative to competitors in the firm. Because there really are, unlike in some of our studies, there really are widely varied outcomes in terms of firms that are doing a really good job from the standpoint of advisor loyalty and satisfaction, and other firms that are really struggling. And I think providing them with that visibility is something that we're in a unique position to be able to do.
Mike, do you have any examples of clients or subscribers who were able to use this data and perhaps change direction or launch an initiative? An example of where somebody got it right.
Yeah, no, absolutely. So, one example, obviously technology is a critically important area right now, and one that's very fast moving. And although most advisors do recognize that their firm is improving the technology that they need to do their jobs, it's also a major pain point for advisors. And firms are challenged to be able to roll out new technologies in a way that is fast enough that they don't fall behind competitors, but not so fast that advisors are overwhelmed and really unable to effectively use the new technology to manage their practice. And one of the things that we've been able to do with a couple of clients is really look at what advisors are saying about specific technology rollouts that have just
Hmm.
happened, and be able to compare that with what we're seeing from best in class brands. Brands that not only have higher scores in terms of advisor satisfaction with technology, but brands where the advisors have specifically given them high ratings in terms of the effectiveness of a recent rollout that was with a similar technology tool and at a similar scale. And so being able to look at both quantitatively and through qualitative verbatim responses, we were really able to provide them with some pretty specific best practices in terms of how to effectively support a major technology rollout in terms of things like communication and training. And it was things that they could really add to their roadmap and pretty much deploy very quickly and really improve the experience that those advisors were having with that new technology tool.
I want to talk a little bit about your role specifically in working with our subscribers and clients. So in the work that you do, the conversations you have, the meetings that you have with our subscribers, with our clients, uh, how are you making a difference? What are you bringing to the table and helping our subscribers better understand what's happening and what they need to do, kind of beyond what just the data and the intelligence can provide on its own.
Yeah, I mean, so for one thing, I mean, I've actually sat in their chair previously as the head of CX Insights for a large financial services wealth team that was global. So I think I can sort of speak their language and understand in a very practical way the kinds of challenges they have. And in addition to my role with JD Power, you know, I get an opportunity to be able to talk with leaders of virtually all of their competitors across North America. And so, really have a pretty clear idea about the kinds of things that best practitioners are able to do and can provide, I think, that experience and perspective which really obviously complements the the data that we have and that we're able to collect from our research. So I think it's a combination of having had the experience, having had the exposure, and I'm always surprised that in a lot of cases, a lot of really smart leaders that I work with maybe really have very much an inside out perspective and not an outside in perspective. And so the ability to not only have worked in their role and dealt with a lot of the same challenges, but having that perspective from having engaged with leaders across the industry, those are things that I think really add value to our client relationships, and really provide some additional credibility to the insights that we derive from our data.
So in my conversations with the industry experts at JD Power, one kind of common theme I'm seeing is that everyone's really passionate about what they do. And Mike, I sense the same in you. Passion for what's behind your passion for wealth management and working with our clients kind of a day in and day out basis.
Yeah, so I do have a real passion for it. I mean, I'm an investor myself, and certainly have worked, managing my own investments, working with a financial advisor. I think that there are a lot of kind of misconceptions about the value that financial advisors can play. I think sometimes there's a bit of a negative stereotype around, stockbrokers, and also just some misperceptions about the ways that financial advisors can provide value to their clients. Things like thinking that the advisor's primary role is really about helping you find the next big investment or the next big company that's going to take off, when really I think the true value that financial advisors provide is largely things like helping you really clarify and understand your own financial goals, helping you to develop a robust plan to achieve those goals, and helping you just kind of stay rational through market and economic turbulence and volatility, and really kind of stick with your plan. So I'm passionate about it because I'm interested in it just as an individual investor, and having been close to it and really seeing the ways that advisors and firms can truly help people to not only make more money, but really have peace of mind around being on track to be able to achieve the important goals that they have in their lives.
So, Mike, back to the topic of the talent cliff. What's at stake here for the firms that get it right, but also for the firms that get it wrong?
Yeah, it's huge. I mean, I think contrary to what sometimes people think, in terms of uh, the financial advisor model being supplanted by AI, or by robo advice, or some sort of like lower cost digital tool. We see a lot of evidence in our data that while those tools clearly have value for some investors, we actually see an increase in demand for working with a human financial advisor, even among those clients who maybe today are using some of these digital tools. I think these tools, in some ways, while they provide value and they solve problems, they also uncover questions and needs among investors that make them more inclined to think that going forward at some point, working with a financial advisor is going to be something that they need and will value. And so, the ability to be able to attract the right kinds of advisors into the industry, to be able to support their development, to be able to deliver the right kinds of technology that they need, and to be able to create a culture that fosters loyalty for advisors, throughout their career, and really creates, not only advisors that don't leave, but advisors who are actively brand advocates and evangelists, is going to be incredibly important in terms of future success. For those who work with a financial advisor, their loyalty is much stronger to that individual or that team than it is to any brand. And so, really, winning the war for advisor talent is going to translate very directly into winning the war for investor relationships.
Okay, thanks, Mike. So just to wrap up, then, you're in an elevator with an industry executive, and you're going, let's say, the 30th floor. What's that conversation sound like? What's the one piece of advice you would give them if they asked?
Yeah, one thing that I see all the time that I think leaders at firms that we work with do is to think about their competition in a kind of an inside the industry way that's really quite narrow. So they tend to think about the threats that they face from companies that are similar in terms of scale and size and business model. And what I would encourage them to do is to look at, whether it's through JD Power's research or elsewhere, to really take a customer centric view of the competitive landscape. We consistently see that when we look at data about other brands that investors are considering, or where they're opening secondary relationships or accounts, we often find that the real competitive threats for brands are not necessarily the brands they've been competing with for the last 10 or 20 years. And so, I think that's one conversation that I've had with lots of leaders, is to sort of expand the way they think about their competitive environment and be able to ensure that they're anticipating the threats they're facing from, the disruptors and the non-traditional competitors.
Mike, thanks so much for joining us today. That was great.
Super. Thanks for having me.
And to our listeners and viewers, thanks for joining us on Expert Advantage. If you're looking to turn actionable market intelligence into strategic advantage, JD Power's experts are here to help. I'm Michael Vermillion, and we'll see you next time.